So indeed, my name is Rylyn Bailey. I'm the VP Investor Relations of Equinox Gold. Our shares are listed on the Toronto Stock Exchange and the NYSE American under ticker symbol EQX. I've been with the company since 2016, so we were once almost an exploration stage company. When we started, we were just a single asset developer. Now we've advanced since that time to be a multi-asset gold producer, and I'm happy to be here today to summarize the progress we've made in the last year, which is quite substantial. You can see on this cover slide a picture of a recent gold pour at our new Greenstone Mine in Ontario, Canada, which poured first gold in May and is now ramping up toward commercial production. I've been with the company, oops, that's not working. Sorry, of course let me go back. Forward-looking statements, if I don't see them, my lawyers will be angry at me. So I will be making a number of forward-looking statements today. Please do visit our website, SEDAR and EDGAR, to learn more about the company. So we created this company at the very end of, this changer does not like me. Created this company at the very end of December 2017, and in that short period of time, as I said, we've grown from a single asset developer to a diversified large gold producer with 8 producing mines in Ontario, California, Mexico, and Brazil. We've achieved that growth by acquiring 1 mine and 2 companies, and we've also built and achieved production at 4 new mines. Along the way, we also sold some smaller mines to optimize our portfolio, and we spun out some of our non-core assets to create 3 new companies. We've got a very large gold endowment with 19 million ounces of gold reserves and an additional 17 million ounces of gold in the M&I category. And we've got a clear path to achieve over 1 million ounces of gold production per year by advancing 3 expansion projects that are already in our portfolio. In 2024, we expect to produce about 705,000 ounces of gold, which is the midpoint of our production guidance, with cash costs of approximately $13.50 per ounce and all-in sustaining costs of around $16.85 per ounce. About 165,000 ounces of that production will come from our mine in Mexico, 75,000 ounces from our mines in California, and 275,000 ounces from our mines in Brazil. And in May of this year, we increased our ownership in our Greenstone Mine to own 100% of that asset, so it's now our largest and lowest cost gold producer. We expect to produce around 190,000 ounces of gold from Greenstone this year with a partial year of production. But when it's ramped up to capacity, we'll be producing around 400,000 ounces of gold per year at Greenstone, with all-in sustaining costs of less than $950 per ounce. With 5.5 million ounces of gold reserves, Greenstone has an initial mine life of more than 14 years and lots of upside that I'll be touching on shortly. So Greenstone will certainly be our cornerstone asset as a large, low-cost mine in one of the world's best mining jurisdictions, and we are very excited to own 100% of that asset now. Greenstone will be one of Canada's largest gold mines, and with an average grade of 1.27 grams per ton gold, it's also one of the highest grade open pit gold mines in Canada. You can see how Greenstone in yellow compares to the other open pit gold mines in dark blue and to Canada's largest underground mines in light blue. Greenstone is also going to be one of the world's lowest cost gold mines. Analyst consensus estimates show Greenstone cash costs around $775 per ounce when operating at capacity, which puts Greenstone in the lowest quartile of the gold mining industry from a cash cost perspective. And we have had lots of reasons to celebrate at Greenstone recently. This thing really does not like me. Lots of reasons to celebrate at Greenstone recently. We poured first gold on May 22nd, exactly on schedule, and a month or so later, the Premier of Ontario and the chiefs from the mine's First Nation partners joined us at the mine site to participate in a gold pour. That's the picture that you see in the top right here. And then on August 28th, yes, that is me in the bottom right corner riding my bike, we completed our ride to Greenstone, which was an epic 3,634-kilometer bike relay from Vancouver to Greenstone. We rode across the country partly to celebrate the mine opening, but also to raise money for the Geraldton District Hospital. So thanks to the generosity of our sponsors, we raised more than $1.3 million for the hospital, which will be a tremendous difference to the quality of healthcare in the region. So we sincerely thank all of the companies and individuals who donated to the hospital to support that endeavor. And then on August 29th, in the top left-hand corner, we officially opened the Greenstone Mine, so you can see our CEO, Greg Smith, our chairman, Ross Beatty, and the mine GM, Eric Lamontagne, cutting the yellow ribbon. So there's lots of highlight videos of both of those events on our website. We're focused now on ramping Greenstone up to capacity, which is designed to be 27,000 tons per day of throughput, approximately 90% recoveries, and production of 400,000 ounces per year for the first 5 years. Ramp-up is proceeding according to plan. and throughput is trending to target. There was a short shutdown in July, which was planned, and that accounts for that little dip in the chart. But since then, we've achieved a rolling 30-day average of more than 30% of throughput in August and have been above 75% throughput on many days. We've got 25 haul trucks in operation, and the truck and loading fleet are operating to plan, and we exceeded 150,000 tons per day mined just last week, which is 75% of our ultimate target of 197,000 tons per day. There are, of course, always a few things that need to be tweaked here or there during the ramp-up process, but it's going really well, and we're really looking forward to be able to announce shortly that we're in commercial production, which is certainly a milestone that the market is watching for. And then once Greenstone's operating capacity, we'll start incorporating the opportunities to extend the mine life and increase production. The current more than 14-year mine life comes from the 5.5 million ounces of reserves in the open pit. But we see opportunities to extend the open pit to the west and to the southeast, and we've also got an additional 4 million ounces of higher grade gold in an underground deposit that is not included in the current economic plan. We can also expand throughput from 27,000 to 30,000 tons per day. The equipment is designed to support that, and we've got the power in place to be able to do that as well. So we'll start to review how to incorporate those opportunities in the mine plan, and we're also going to look at upside potential in the district. We've got 700,000 ounces within trucking distance of the mine, a 680,000 ounce high-grade deposit that could potentially be developed on its own, and lots of exploration targets in the region that we'll start to review. So we're getting the bump to production and cash flow from Greenstone this year with around 190,000 ounces of production, and then when it's operating at capacity, we'll see that increase to 400,000 ounces of gold per year. But we've also got 3 other expansion projects that could collectively bring an additional 350,000 ounces of annual gold production in the coming years. We're advancing an underground expansion at our Arizona mine that will extend the mine life and increase production, and we intend to start portal development on that next year. We're advancing permitting for a big expansion at our Castle Mountain mine in California, which will add more than 200,000 ounces of low-cost production with at least a 14-year mine life. And then we're hoping to do a big expansion at our Los Filos mine in Mexico that will extend the mine life, reduce the cost, and bring another 120,000 ounces of annual production to the company. And it's important to remember that all of that growth is already built into our portfolio. We have all the projects and plans in place that we need to achieve that sort of magic number of 1 million ounces a year of gold production. And of course, once we bring those large, lower cost projects into production, we'll see our consolidated costs come down. The chart on the left shows analyst consensus estimates for our production growth in 25 and 26, and the corresponding decrease in all-in sustaining costs are around $13.50 per ounce. And with the acquisition of the additional 40% of Greenstone, we've also increased the percentage of our NAV that's in those top-tier mining jurisdictions of Canada, Brazil, and the United States, with Greenstone in Canada now representing more than 50% of our net asset value. So we really feel like we're at an inflection point in the company's history, with improved diversification across North America, increasing production and decreasing costs. And of course, all of that cash flow coming from Greenstone ramping up and with current gold prices will help us to strengthen our balance sheet. At the end of June, we had just shy of $175 million in the bank and $105 million available to draw on our revolving credit facility. But our priority now is to reduce our debt. Our primary capital allocation priority with Greenstone in production is debt reduction. As we've grown the company, we've been acquiring and building mines and have been using debt as one of the funding methods to do that, including an additional $500 million term loan in May of this year to consolidate our Greenstone ownership. Increasing our ownership in Greenstone could bring nearly $200 million in additional EBITDA in 2024 using current spot prices, and even more when operating at a capacity. You can see that jump here in the columns on the right that are using analyst consensus data. Our plan now is to use the increased EBITDA and cash flow to pay down our term loan with the target of getting below a 1x debt to EBITDA ratio by 2026. Consolidating our ownership in Greenstone also enhanced our growth profile, which you can see from the 2 charts on the right here, with our pre-transaction values in light blue and then our new rankings in dark blue. But you can see from this slide that despite having the strongest production growth in our peer group and having the second largest reserve base of the mid-tier producers, we're still trading toward the bottom end of our peers, which is an investment opportunity for new investors, but a little frustrating for existing investors. Our job now is to get Greenstone ramped up to capacity, and we should see that progress start to be reflected in our share price as we climb our way back up this valuation ladder. And as we execute on Greenstone and our 3 expansion projects, we'll be increasing production, increasing cash flow, reducing our costs, and reducing our risk, all of which, of course, add value to the company. And that's how we plan to take Equinox Gold from the left-hand side of this chart, trading well below our peers, to the right-hand side of this chart as a solid, profitable, sustainable million-ounce-a-year gold company that's valued as a senior producer. Along with our strong growth profile, another thing that separates Equinox from our peers is our insider ownership. Insiders own 7% of the company. Of course, our chairman, Ross Beatty, owns the vast majority of that, but he's our largest individual shareholder. But all of our executives and directors have invested their own money to help build this company, and the majority of our employees participate in our share purchase program. So we're all personally invested in this company. We're very aligned with our investors and committed to this company's success. And we're working hard to build a profitable, sustainable gold company that will be a legacy for our team and will create value for our shareholders and community partners for many years to come. So with quick wrap up here, with Greenstone coming online and the backdrop of historically strong gold prices, we feel that 2024 is truly a transformative year for Equinox Gold. We've got near-term, low-cost production growth coming from a world-class mine in one of the world's best mining jurisdictions. We've recently consolidated 100% ownership of that asset at the very beginning of its mine life, which of course gives us 100% ownership of all of the upside as we go down the path. We offer exceptional leverage to rising gold prices. We'll have increased production and increased cash flow with lower costs. And then, of course, achieving production at Greenstone has pivoted Equinox Gold from what's been nearly 3 years of capital-intensive construction to being a cash flow-generating large gold producer. And we should see that transition reflected in our share prices. Greenstone ramps up to capacity. So I think we actually have time for 1 or 2 questions, if anybody...
We do indeed.
Sure. Don't be shy. I'm here right till the end of Friday, so you can always track me down.
Hey, how you doing? Congratulations on moving more into production. I wanted to ask a question about the dividend yield based on the peer group that you're having, and you're trading, you said, lower than your other peers. Do you get a comparison on dividend yield with some of those others? Would you know that?
We're not currently paying a dividend. It is certainly in our plan for down the road, but I think it'll be more around the time that we achieve that sort of magic million-ounce mark. Our priority for the last couple of years, or the last 6 years, has been growing the company through M&A and by building the 4 mines. We've just completed the build at Greenstone. Now our priority is ramping that up to capacity. Our next capital allocation priority is reducing our debt so that we can get our debt to EBITDA leverage ratio below 1 times. Once we've done all that, and I think started construction at one of our expansion projects, then we might be ready to start looking at returning some capital to shareholders. So we appreciate your patience, but it's something that's in our list. Ross Beatty, as you know, is an investor, and it is certainly something that he wants as a check mark as our largest individual shareholder. Any other questions? You've got to have a question, Rick. True.
Listen, Riley, that's wonderful. You know, you've got growing production, reducing costs, expanding margins. Really, what's not to like in terms of a gold company? Having the capacity to build mines is a rare skill. So good on you guys. You've really kind of turned the corner. This is now's the time to really start to make hay.
Thank you. And I do get questions about why our valuation is so low when we have 700,000 ounces of production and all that growth built in. And I think it's really the market right now. There have been some blowouts with new mines that have come online. We've achieved production at Greenstone on schedule, which is great, but I think the market's taking a bit of a wait-and-see attitude to make sure that we can ramp up effectively and then operate at capacity. So hopefully we'll start to see that valuation and that achievement reflected in our share price early next year, if not before.
Well done.
Thank you.